Hello, everyone. Good morning. At least for me, it is good morning because, as you can see, it's 7:47 in the morning. I'm getting a video recorded here before I head off to work, just because I had some extra time and I don't really know how else to fill it other than get a video recorded because it's been a while. Some things have changed. Hopefully, the echo isn't too bad. I've now fully moved into my new apartment. I've got my computer set up, got internet finally. Was a bit of a weekend to get that going, but it's now Friday at the end of the week. I moved in the 15th, so it's been a couple days, and I finally got things going, at least squared away as far as like my routine and just like my finances in order now that I am on my own, and just how things are with like rent or whatever because I can't use credit cards to pay the rent without paying a fee. I have to make sure I keep money in my checking, which is not something I am really comfortable with because I just feel like it's a waste having money sit there. But anyway, we're starting off with a little bit of a different screen. We're kind of starting off the net worth tracker, and then we'll kind of work our way through. Usually we end with this, but I guess this is kind of the main point I want to cover today, and we'll kind of go from there. I want to try to leave in about a half an hour or so. So just trying to get this recorded. So where we kind of left off as the last time is I've been debt free for about a month now, about a month and a half, I'd say. We'll say a month just to be even, but yeah, it's been great. It's definitely helped a lot. If I still had these payments while living here, it would have been tough. I probably would not have been eating this month at all. So there's that. I did go shopping last Sunday, and yeah, that was painful to have to like buy stuff, because I haven't really had to do that at all for myself, which is kind of sad at the age I am. But when you're in college at home because you're able to, you don't really have to do that because I didn't really have a normal college experience in terms of like being in like dorms on my own. So I guess that's where we're at. So my car, rough approximate value, it's probably changed. I'll probably have to update that sometime this month, next month. I'm not sure. Watch value, that's the retail of it, so that's what it would cost for me to replace it. These are my current investment portfolios at their current price. My goal is to still get $1,000, 500 in each by the end of the year. We'll try to see if we can get that going here soon. But again, I'm trying to, get the routine down of having money ready to go for rent. Hopefully, I get paid in a couple weeks, like right after rent is due. So I think that check should be pretty decent. It will go towards paying whatever bills, making sure I have some, but then investing, I think, should be open to go for that. Um, and then my retirement account has been slowly going up, which is good because I haven't been contributing anything to it. You can see that pretty much since February, I have not added anything and it's gone down and up. So it is what it is. Right now, I put a couple more hundred in savings because I need to build that up. I want to get that emergency fund going. At least want to get to 1,000. Hopefully a little bit more. Since I am renting and not home owning, I don't have to worry about appliances breaking and having to pay for that out of pocket. That's the landlord's responsibility. So the need for maybe 6 months of emergency fund is not as needed as if you were living on your own. 3 months should be very sufficient. So I'll probably get that planned out. I do also want to get my second goal of getting $10,000 in investments, but we're getting there. Checking, kind of take that with a grain of salt because $9.55 is my rent, so I have like $40 to my name outside of that, but we're getting there. So yeah, we've officially surpassed $30,000 in assets. Again, I guess we passed that in January, but now selling the car, like straight up pure, like my net worth is straight up my assets. I don't have any liabilities holding me back. And then my current net worth, as you can see, is that exact same thing. We've passed 30,000. So as you can see, in the last, since we've been tracking this since mid of last year, June of last year, we've just gone up slowly. There will be a point where this will start to take off and my money will start compounding itself. As of right now, we're not at that point. So all this progress has been for me just accumulating money through my checks and investing it wisely, opposed to just blowing it on stuff that I didn't need. And then you can kind of see I've had some months where I went up, $4,000 back when February and Trump bucks hit, and then we've had months where we just didn't do so well. So that's just kind of how it goes. This is the tab that I use to keep track of my debt snowball. If you've never seen it before, it was very useful to look at and kind of give me numbers I wanted to see. This is my favorite part, seeing those red paid off words. But I had the amount that they were currently at, where they started, how much they paid off, the interest for each, what their minimum payment or what their payment was that I was paying on them, and then the minimum. I was paying slightly over. It was like $215 on the car and $115 on the watch, so I was paying it off slightly faster to begin with. But yeah, that's where we're sitting at right now. Getting towards the end of August, we still have 4 months left in the year, so I'm really excited to keep cranking along, and hopefully we can start building wealth, even living on my own, which is, I'm not going to be able to hit these huge numbers that I did earlier in the year, but, a couple $100 here and there should go a long ways. So yeah, taking a look at the Robinhood portfolio, nothing has changed. I have not been able to contribute anything. The only thing that is changing is the dividends that are coming in. A couple days ago, we got paid nearly $5 from Energy Transfer. Excuse me. TD Ameritrade and Charles Schwab will be paying us coming up next week, it looks like. Or actually, TD Ameritrade will be today. Charles Schwab will be next week. Wells Fargo cut their dividend, which is very painful because I think last time it was like close to $9, and I was expecting a whole lot more too, because I have 23 shares. Let's see if I can bring up a calculator here quick. 23 times 0.51. I should have been getting 1173 this time around. So you can see it hurt quite a bit. Duke Energy, Shell, and British Petroleum will be paying me, and hey, I'm still getting dividends from other places. It's not my lively income, so it's not like it's really hurting me. It stinks. It hurts, but now that Wells Fargo is down quite a bit, I might be able to pick up more shares of it. I'm not giving up on Wells Fargo. That's just, for some reason, that's just one company that really calls for me. I will never bank there, but I will definitely take their sweet dividend money. So, other news to be covered, but I don't really do the news on here so much. I mean, the big things that I have been keeping track of and whatnot is Apple's dividends or split, which should be coming up some point this month, where it'll be a 4-to-1 split. That will be really cool to see, and maybe then I can invest in some Apple on this portfolio. Not that I really need to, but it's worth a shot. Apple's just going to keep going up, and it's a good investment. Over in the M1 finance portfolio, same deal. Haven't really contributed anything. It's kind of been stagnant, but slowly going up, I'd say. On this one, I do have Apple, but just such a small holding. But you can see like that's basically making up a big portion of the gains in this section is Apple. And I've told people before in other videos, or I've told in other videos rather, that this was copied from the Joseph Carlson show, and he's changed his quite a bit, and I have not. I'm pretty okay with where this is at, because I don't have a lot of money into it. It's one of those things, like, he didn't bother at like doing many changes to it until he had a lot of money. So that could be the same thing too, is once I have more money and I can make bigger moves, that will probably be more worthwhile. But as of right now, I'm pretty content with where it's at. Taking a look at this month so far, we've gotten not really a whole lot. Really, AT&T was the only thing that really paid out well. But again, I mean, August usually isn't a big month for it. It will be, I believe, September, October. No, yeah. So September should be a big month coming up. So we'll take a look at that and kind of see how we compare to the rest of the year and the other months so far. But yeah, I mean, it's always nice, waking up and seeing that I got some dividends. But and the other thing is too is these ones pay out like every month, so they're generally a bit lower. But 0.78 times 12. I mean, that's $9 a year. That's quite a bit, even though it doesn't seem like very much. Like in the month itself, it's a lot. And these bonds also pay out quite a bit. I mean, this one right here, corporate grade bonds, 80 cents, also times 12 months. yeah, $9 a year. So that's pretty good money for what it is, despite it just being bonds and whatnot. But I'm okay with it. I'm content. Taking a look at the stock portfolio, again, nothing's changed. I haven't updated anything, but sometimes it's always good to kind of look over it and see where we're sitting at. Right now, overall, we're like down $14, which doesn't make a whole lot of sense. Yeah, because I've only invested 4,500 of my own money. I guess it doesn't necessarily count that because dividends count for that too, of money that I've put in. So there's that. But yeah, we're sitting pretty low on Wells Fargo, which is okay. But at the same time, we're also up quite a bit on Royal Caribbean, so it balances itself out. Kraft is also another like big heavy hitter that I've gone up on a lot on, which is nice. Yeah, it's just a work in progress. Could it be next year that I sell off some of these companies because I don't see the long-term future in them? Absolutely. But for now, I did some trimming back in June, and I think this portfolio is a lot better now. And that's the fun in investing is like, even though, I've put this money aside and I haven't really done a whole lot with it, it's teaching me a lot about money, and it's the best lesson in money I've ever had outside of, I don't know, honestly, like, give every child $1,000 to play in the stock market and learn, because I've learned a lot. There's not every company is going to be a good investment, but you can still make money from it. So dividend section I've kind of tried to keep up to date with, but not so much. But so far this year we're at or projected for $80. So that's really cool to see. Haven't bought any companies since June. That's the last time I made an update, but yeah, I mean, I'll have to go through this on the next time I buy stocks and change Wells Fargo from yearly payout to 204 to whatever it is now, but so we can get a better representation of how much my income has changed because of the coronavirus. Hopefully it goes away next year and we can move on to happier times and more prosperous times again. Honestly, like, the stock market was probably never going to go down if we didn't have this black swan event. Yeah, and if it hasn't been clear up to this point, I'm a dividend growth investor. I don't know if it's necessarily the growth part, but I'm a dividend investor. Is whether or not my dividends go up or down, I'm still very content with just getting this money on a yearly basis. This is money that came to me without having to work for it. $250 of passive income. And if you haven't seen it before, I've calculated it before. Like, if I don't invest any more money, assuming my dividends don't change for however long, I'm 25 and 65 is roughly the retirement age, so another 40 years. So assuming I continue to have my job and I just get this money every year, $257 over the next 40 years is an extra $10,000 over my life in income that I would not have normally had. And that's just one portfolio too. I mean, that doesn't seem like very much, but for like someone that works minimum wage, that's an extra half year of income. Granted, if you're making $100,000, that's not a whole lot. And for some people, they make $10,000 a check. But, for someone that doesn't make as much money, $10,000 goes a long way, especially in investing. And if I'm reinvesting this, it's just going to continue to grow. Because the last time there was like $239, and you can see just like $10 here and there adds up to quite a bit over the long term. But yeah. And then the last one is this M1 Finance portfolio that I keep track of. Again, this was copied from the Joseph Carlson Show. As you can see, it was created by or created for the Joseph Carlson Show. And it just makes sense. I'm using his portfolio, as far as like what stocks he did and the format he did it. Why not use the same sheet? And the reason why I can't use the same is this one is easier because I have to buy full shares. This was before Robinhood started offering fractional shares. So it's easier to just keep track of full shares that you have. Where M1 Finance, you have fractional shares all over the board. Like, let's take a look over here. Oops, in holdings. I have 2.69 shares, 4.6, 8.07. Like, there's no way to keep track in this organized manner. I suppose I could try to yeah, like average price. So I could theoretically do it. I would have to put like 8.07 shares. My average cost was this, and it does have that where I could plug it in to a similar format. Um, but it's just I feel like this format works a little bit better, and it's I don't know. There's just a lot to it that I think works really nice, and I like having both of them. So each month I update it with the month, the year, how much I made in dividend income, and then my portfolio value, and then it plugs in, updates the month over month growth rate, which so far has always been positive, which is awesome. It keeps track of what my actual income is, my average monthly income. All right, excuse me, I had to sneeze there. So I paused. It keeps track of what my average monthly income is. And as we keep in adding more and more months, it gets closer and closer to what it should be. As this chart gets more accurate too. There was a point when like some were like crazy higher than it, but you can see it's definitely averaged out, which is good because then it means my average annualized income is becoming more accurate. And in the same vein of me tracking what my yearly income is through dividends, that's what this number is as well. So we're getting $10,000 in one portfolio. Oops, not 0.4 years. That's an extra. It's almost $6,000. And granted, in the very next month, let's see if I can get another calculator up. It's supposed to be 162, but I don't know if I've been adding money, so it'll probably be down because I haven't been adding. But assuming this is getting closer to accurate, I mean, just in 1 month, my average annualized income has gone up to a point where over the 40 years, that's an extra, we'll just say $700. I don't know. Yeah, that's actually pretty close. So an extra $700 just in 1 month of growth, just from an extra $20 of income, compound interest, that's how it goes. And, if we take a look at July of next year, it's supposed to be up to $300. That's like doubled income. Now, it will probably be a little more realistic once we get a little closer to that point, but I mean the idea is still there that this portfolio is going to be growing. I'm going to be getting more income over this time, and that's what all these averages and numbers are figuring out for me. Is each time I updated it, recalculates the numbers. Because if we take a look at, I think it's this. Yeah, look at this huge formula. Like, I have no idea what any of that means, but growth cap percentage. So anyway, this is kind of that chart of it. Like the blue is going to be my average income from month to month, and then the black dot is what my income actually was that month. Sliding over, this is just the same chart without the blue lines interfering, which makes it a lot easier to see the 1, 2, third month, 1, 2, third month, 1, 2, third month. And you can see that it just keeps going up, and December and June will be the highest of those generally. Once we get more data points, you'll see the pattern a lot easier, but I mean, to this point, we're starting to see it already. This is that average yearly income on a chart, so you can see it's probably not going to actually be linear, but it could be, assuming I added money each month. But I've been slacking because I've had expenses, and moving is not cheap. In the sense of I didn't pay anything to move, but switching from not having rent to having rent, that can be a bit of a transition. But luckily I have the income to do it, but it just means I have to sacrifice on how much I'm investing. I mean, there's been some months where I was able to invest like $1,000, which is for my income crazy. And then the last little chart that it graphs is my portfolio value, and you can see like right around May, I'd say this is, it's been stagnant because I've been focusing on getting ready for moving. So that happens. But yeah, I mean, this was a bit of a shorter video, I guess, compared to some of the other longer ones I've done. I just wanted to give you guys an update because it's been a bit. I've kind of stopped making all other videos because they just, the work I've put into them for the benefit, or I guess the results I'm seeing from them, just isn't there. Now, do I see results from these videos? Not really. But you know, this is the labor of love. This is what well, I guess it wasn't what I initially wanted my channel to be. This channel was initially supposed to be me and my brother making videos about watches, but he just never got around to wanting to do those videos. And finance is something that I'm personally interested in, that I can personally make videos on. Gaming is something I do for fun. This is something that I do in a different sense of fun, you know. Um, like I was watching a video yesterday or the other day where lower income families do not talk about income or money or any sort of things. So then those kids grow up not learning any lessons, and then they make the same mistakes their parents did on, you know, buying liabilities, not buying assets. And then they perpetually put themselves into debt and farther along, and they just don't get ahead in life. Where rich families, from like minute one that the kids are able to understand concepts of money, they start teaching them about money and concepts, where they start buying assets from an early age, and they never buy liabilities until their assets can buy their liabilities. And if you've ever read Rich Dad Poor Dad from Robert Kiyosaki, um, it's not like the best book in the world in terms of like groundbreaking stuff, but some of the stuff he talks about is good, and it's a good way to shape your perspective. Um, in the last year, I've tried to get a lot better about reading certain books, or just books in general, because that's really how you also grow your mind, is through reading. And it was something growing up in school, I wouldn't read the first chapter of any book we were assigned because it just didn't interest me. To now be at my age now that I'm willing to read books, you know, just a couple pages. And the thing is, they don't even want you to read a lot, where in school it seemed like they wanted you to read a lot because they wanted you to get through that book really fast. I read like 15 minutes a night, maybe a couple pages. Like I choose how much I want to read, you know, and I don't have any deadlines or anything. It's just as fast as I want to read it. But anyway, back to the book, is he tells you a lot about buying assets. Don't buy liabilities. Liabilities keep you poor. But once your assets, you know, once your um, dividend income can pay for your assets or your liabilities, why not? You know, if I was getting $300 a month from dividend income, theoretically I could buy a car if I wanted to and just have my dividend pulled out each month to pay for the car payment, you know, because then I can keep my income going towards my assets or whatever else. And, you know, I'm not putting myself, you know, in trouble because I'm not working. I'm pointing at the screen, but I'm not working for this money right here. Me going to my job, that's me sacrificing, you know, 40 hours a week. Or the other side that some people choose to do is they build up this income to a point where they can walk away from their job. I right now, my burn rate's about 2,000 a month between rent and, you know, bills I have to pay. If this could get to $2,000 a month, I could walk away from my job and be okay. Now, would I want to do it right at that point? Probably not, because, you know, what happens if I have a bad month in dividend income, or what if I have expenses I need to pay for? There's a lot more factors going into it, but the premise is you theoretically could, you know, and that's what this fire movement's all about. And that's another topic for another day. But this end of the video kind of got on a tangent, but it's, you know, again, all this video series is about is opening up my perspective and my point of view on what my goals are for investing. And some people just don't understand that, or, you know, they don't know their own personal, you know, point of view. So it's just kind of teaching that. And also it kind of lets you in on like, how does someone go like in a year's time investing while still having to pay for other things? You know, you've been able to see me pay off debt. You've been able to see me through coronavirus and, you know, not being in work for a couple months. That's something I've never had to do in my years of working. In my 10 years of working, I've never been off for a couple months because of something. And that's happened in 1 year. And still paying off debt, it's still possible. Granted, I was living at home, there's that. But now I'm on my own, and I'll have Christmas coming up, and, you know, all these different, you know, factors of life that come up. You know, how do you continue to invest with those factors of life? So hopefully, someone will come along and see these videos as helpful or useful or learn something from them. I'm no expert in investing. I'm not a personal finance. I can't think of the term. Um, but I'm just someone that's really into it and wants to maximize my own money and my own efforts. So hopefully you could hear this video really well. I don't know if it's echoing or not. I'm still gonna have to work on the sound in this room because it is very echoey. So, but anyway, guys, I want to thank you so much for watching this video. If you've made it to this point, that is so awesome. If you have not, that is okay too. I know someday people will make it to the end of these videos and they'll see the rants and my gratitude. But until that point, I'm just gonna keep making these videos. It's what I enjoy to do. But I hope you guys have a good weekend, a good next week, a good month. Finish out well. Hopefully everyone is staying healthy. But anyway, guys, thank you so much for stopping by. Take care.